Hello everybody and welcome to my monthly Vietnam update. After 3 consecutive months of significant decline from the short-term peak of 1,250, the benchmark index rebounded in November, surging 6.4% to a close at 1,094 points. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you. It is essential to recognize that the October market downturn, which saw a drop of over 10%, lacked clear fundamental triggers related to macroeconomics or corporate earnings. Similarly, the November market recovery occurred without any specific positive news. This phenomenon underscores the inherent volatility of a frontier market like Vietnam, where the stock market can exhibit substantial fluctuations in the short periods without specific catalysts. In the Vietnamese stock market, over 90% of daily trading volume is attributed to local individual investors, many of whom utilize high leverage ratios. As a fund, we don't engage in excess buying or selling like these individual investors, but we will capitalize on market volatility to acquire quality stocks at favorable prices. For those with a long-term investment horizon, market downturn presents favorable buying opportunities. Our CIO, Vicente Nguyen, for example, has been investing in the AFC Vietnam Fund each quarter since 2016, weathering both high and low market phases, resulting in a satisfactory average price over time. Overall, a regular investment approach could be a prudent approach, particularly for those who share our confidence in the long prospects of the Vietnamese economy and stock market over the next 10 to 20 years. So let's talk about the panda diplomacy and the potential normalization between the US and China's relationship. One of the recent positive developments is China's decision to resume lending pandas to the United States after a hiatus is a noteworthy signal of a potential normalization between the two nations. The interruption in panda lending occurring just before President Xi's visit to the US underscores the growing divergence between the two economic giants. However, the renewed gesture announced post-Xi's visit suggests a thawing in relations. This diplomatic move is an initial indicator of a potential improvement in ties between the US and China. Given China's crucial role as an economic engine in the region, any positive shift in its relationship with the US could bode well for Asia, particularly in light of China's recent economic challenges exacerbated by its isolation from the US. Panda diplomacy, while seemingly symbolic, carries a broader implication for regional economic dynamics. In terms of the economic environment, it appears that the high interest rate scenario in the US is approaching its peak. In November, the Federal Reserve opted not to raise interest rates, considering that US inflation was better than anticipated, closing at 3.2% year-on-year, in proximity to the Fed's 2% target. Over a year has passed since inflation reached its zenith at 9.1% in July 2022, with the Fed maintaining the interest rate at 5.5%. While there are debates regarding another rate hike, the consensus suggests that the Fed might halt increases and potentially initiate cuts by late 2024. Also, economic forecasts vary. There's a reasonable certainty that the pinnacle of the interest rate cycle has been reached or is in close proximity. Historically, When interest rates peak, the stock market tends to be at its lowest, with the potential for a subsequent surge as the Fed begins to lower interest rates. Furthermore, the US dollar weakened in November after the Fed's decision not to raise rates, contributing to a decline in the US dollar index from 106.7 to 103.6 by month's end. This weakening of the US dollar also influenced the exchange rate between the US dollar and Vietnamese dong, resulting in a 1.2% decrease in November from a US dollar Vietnamese rate of 24,565 to a rate of 24,271. The interconnectedness of these factors adds to our optimism regarding a gradual improvement of economic conditions. We are particularly optimistic about the recovery of Vietnam's export sector, which appears to have bottomed in the first half of 2023. The aggressive increase in inflation in 2022 prompted US and European consumers to reduce spending, causing a significant drop in Vietnamese exports. However, as inflation subsidies and signals suggest, the Fed may cease rate hikes or even reduce rates in 2024, consumer confidence is expected to rebound, positively impacting Vietnamese exports. November marked the third consecutive month of positive exports growth in 2023, reinforcing our belief that exports will continue to recover, returning to a consistent positive growth in 2024 and beyond. Accordingly, we maintain a comfortable position by strategically investing in export stocks, which currently constitutes around 20% of our portfolio, making it the largest sector allocation. Vietnam's strategic positioning in Southeast Asia, its extensive global integration through numerous free trade agreements, government support through tax incentives, low-cost labor, and abundant rare earth reserves, positions it favorably to further contribute to the global semiconductor value chain. In 2022, Vietnam's semiconductor exports reached $6.5 billion, growing by 83% year-on-year and representing 3.8% of global exports for its product. The country ranks among the top 3 Asian nations exporting semiconductors to the US, indicating its emergence as an outsourced semiconductor assembly and test player. Global semiconductor companies have increasingly invested in Vietnam, mainly in OSAT facilities in the northern region and R&D centers in the south. Drawing parallels with Vietnam's transformation in the past decade, from an agriculture exporter to the world's second largest cell phone exporter, we anticipate a similar trajectory in the semiconductor industry. With China and Taiwan experiencing conflicts and uncertainties, the need for diversification in semiconductor manufacturing is paramount. Vietnam, with its proactive investment environment and significant potential, may become a key player actually, in the global semiconductor market over the next 10 to 15 years. Well, this is all from me. Thank you very much for listening, and you're gonna hear from me again next month with a new update. Thank you and goodbye.